If you're under the PDT, you probably don't have $24,999 in your account, okay? You probably have $5,000, $2,000, $1,500, maybe even less. And a lot of people think that you can't trade with that small of account and make decent returns over the time because you can't trade the higher price stocks. Today, I'm going to tell you what to focus on and how you can still trade some of these multi-day runners and save your day trades and really grow your account. Hey everyone, Lead Trainer with Stocks to Trade, Tim Bowen here. Be sure to like, subscribe, and share these videos with your friends. Also, ring that bell. Lately I've been going live every single day, sometimes twice a day. That way if you ring that bell, you get that notification, you can jump on. With the pre-market prep, every morning I'm talking about the biggest movers of the day. Today we caught an incredible move on EVK when it gapped up on news, went from 450 to almost 7. It was one of the main, actually it was the only stock we talked about in the pre-market prep. Ring that bell, you'll get notified, you can jump right on. And the thing is, it's not about picks. What I'm doing, and this is what I'm really proud about all of these videos, is I'm giving you the how and the why behind a move like EVK. We talk about the news, we talk about the technicals, we talk about the fundamentals, we really break it down. At the end of the day, my goal is to teach a man to fish so that way you can spot the next EVK. All right, that being said, let's talk about trading with a small account, trying to target multi-day moves to really grow your account and not burn up your day trades, okay? I won't really get into the particulars of the PDT because we talk about it a lot, got a bunch of videos, but just remember if you've got less than $25,000 in your brokerage account, you can only make 3 round trips in a rolling 5-day period. So that kind of handicaps you. I mean, if you make 2 or 3 day trades on Monday, you're basically done trading until next Monday, that rolling 5-day period. So I want to talk about spotting real stocks, okay, quote unquote real stocks that give you good risk to reward and give you the potential to profit. You know, it's like Amazon. I mean, I joke about this a lot on the podcast or on webinars. I mean, I always say if I was to go away to the wilderness for a year, okay, I'd buy Amazon. I mean, listen, with the stay-at-home orders, with Christmas season coming up, I mean, I don't know about you, but there's days if there isn't an Amazon package on my doorstep, I'm like, what happened? You know, is my UPS guy okay? I mean, it's hard not to see the trend there. But the problem is Amazon's $3,000 a share. So if you've got a $3,000 account, you buy 1 share. First of all, your account is fully utilized. You know, you're at max buying power, which we would never recommend for several reasons, because let's say Amazon has bad earnings or Jeff Bezos does something bad or government regulation. I mean, we've seen that with a lot of the big boys like Google and Microsoft. What if the DOJ comes breathing down Bezos' neck and the stock drops 20%? You're fully in with your full account. It's going to get ugly fast. And then the other thing is, even if you're right, you just can't 1 share. Even if the stock goes up 10, 20%, you're making 20% on 1 share. It's just hard to catch those moves. And simple fact is, when you've got a market cap like Amazon, I think it's bordering $2 trillion, it's almost impossible to get the big moves. But you can spot these stocks that aren't going to stop you out. Well, they can still stop you out, but aren't going to panic you out like a lot of the low price stocks do with these crazy volatile moves, and they can still grow exponentially over time. Oh, and then I almost forgot. Should have looked at my notes. The last point I want to make is, let's say you are all in on one stock. Keep in mind this too. A lot of people kind of overlook this. You can't trade anything else. So if you're in Amazon with 1 share and it's 99% of your account, if there's a big runner like an EVK or a BPTH or an SPI or all these other big runners, you can't trade them because you got no buying power. So the nice thing is, I want to talk about $5, $6, $7 stocks There's criteria to look for, and we go over this every single night in the steady, or not every single night, every single Monday night in the Steady Trade team. I'm live every day, twice a day in the Steady Trade team. Monday nights is when we do the strategy session. That's when we slow things down. The market's usually a little quieter at 7 o'clock at night. Hopefully. It's been a wild year. But we can slow things down. We can really get into the nitty-gritty of things and break down the criteria we're looking for stocks that can make big moves. So here on my screen, you can see is a perfect example of that. It's GME, so GameStop. Okay, this was a $5, $6 stock a couple weeks ago. And this checked every single box of what we were looking for. And when I talk about checking the boxes, that's why I want you in the Steady Trade team, is we break these stocks down. You can see this stock, Plug, was a killer swing trade. Now, keep in mind, I don't expect you to be able to read my handwriting. I'm just showing you the worksheet that we use every single Monday night to break these down. And what we're doing is we're talking about the how and the why. That's why you see all my notes that appear to be encrypted. But you can see that this stock checked 9 out of 10 boxes. The price action was there. It was a hot sector. Plug is charging batteries and electric vehicles. They had decent earnings. Stars aligned, and this stock went from 15 to 20 from the criteria we were looking at. We had a good entry right here at 15.75, a goal of 20. It hit the goal a few days later and worked out perfectly. That's what we're looking for on something like GME. So when I'm talking about checking the boxes, we've got a hot sector, gaming, okay? I know you're thinking GameStop, the store, and you're probably thinking, well, retail. But the great thing about GME is we've got multiple catalysts because they had an activist investor, and that's this big candle right here. An activist investor got involved and said, hey, we see the future of gaming. We know this is the big deal out there. And this is actually one of the big sectors I want you to keep an eye on in the fall and winter. I think sports, viewership-wise, are in trouble. If you see the numbers on Twitch and the esports and just the viewing of esports, this is a hot sector to very closely watch going into especially Christmas and 21. So I got a hot sector. I got an activist investor that's pushing them to make moves. So you might not be familiar with the term activist investor. That means it's a hedge fund or a really wealthy guy that's putting some money in, but he's saying we got to make some moves here. So soon after, they announced a deal with Microsoft. Soon after, they announced a deal with Sony. Not a coincidence. And this stock spiked each time. And what's great about it is you've got that breakout chart we look for. You can see the unusual volume we look for. Each time this breaks out, you can see that big breakout here, big volume. Big volume here, breaks out. Big volume here, breaks out. Today, it touched a new 52-week high. It's pulling back a little bit right now, but markets are a little shaky. I'm recording. You can probably see my date. We're recording a week before the election. Market's a little shaky, but you can see that the stock just runs and runs and runs. And it checks every single box when I talk about that. Hot sector, earnings, activist investor, deals, recent movement. This is a former spiker. You can see it spiked 3 or 4 times. So this is, and it's a real company. What's great about Stocks to Trade is we can look at their financials. It's $1 billion market cap. They've got sales of $6.5 billion in sales. This is no penny stock. But you can catch penny stock-like moves in low-price stocks, and they make multi-day moves, which means you don't have to burn your day trades. So now, let's say you bought 100 shares at 6. You've got a $600 position, and the stock's at, it touched 16 today. You're up $10 a share. You're up $1,000 on a small position that you don't have to micromanage, and you've again only got that $600 position. If you got that, back of buying power. Now you're up $1,000, but your buying power is only tied in for that $600. So now, let's say you got that $3,000 account that we talked about with that 1 share of Amazon. You've got another $2,400 of buying power to day trade with. So now maybe buy 1,000 shares of some sketchy $1 low float runner that spikes to 3 or something. So now you're not handcuffed by the PDT. You can still catch these multi-day moves, and you've got enough buying power to day trade too, because GME, if you're holding for days or weeks, you're not using that day trade, and you can sell at any time, because after that first day, after the day one on GME, even if you're out of day trades, let's say you burned all 3 of your day trades, you can still exit GME, which you can't do. I mean, that's the scary thing about the PDT. And, it's one of those things, I use these quotes all the time, but whoever came up with the PDT, he should have like a t-shirt that says, "The road to hell is paved with good intentions." And then on the back, it should say, the Ronald Reagan quote, "The 9 most dangerous words in the dictionary are, I'm from the government and I'm here to help." The PDT is a terrible idea, but we have to deal with it. Now, so what's great, you swing trade these, you can exit at any time, you can be agile with your day trades, and you can have the best of both worlds. So don't fall for that fallacy that there's no such thing as a low-price swing trade. There's no such thing as a low-priced multi-day, multi-week, multi-month hold. We nail them every week in the Steady Trade team. My sweet spot for these swing trades is that 5 to 10 area. You go on CNBC, you follow the mainstream financial media, they're going to tell you you're crazy to swing trade a $5 stock. They're going to try and ram you in the Apples, ram you in the Amazons, ram you in the Teslas, and you're going to lock up your whole account. You're going to miss the big runners, and even if you do catch a good move, it's not going to make a difference in your account. So 5 to 10 is the sweet spot, maybe as high as 12. Look for those criteria. Check out the Steady Trade team. You get access to all of these worksheets. And not only, it's not like you just get a copy of the worksheet. I've done 4.5 years of the Steady Trade team now. How many Monday nights is that? 4.5 years times 52. So you've got whatever that number is of strategy sessions where we go over these sheets to learn the process. Then if you join today, next Monday night, I'm there. It's interactive. You're asking questions. I'm explaining everything, the thought process behind it. And it's the best way, I think, to learn day trading and swing trading. And I can't think of a better way to learn how to get your account over the PDT. I mean, that's every small trader's dream. And I agree, it should be a big goal. There's no better way to do it than swing trading low price stocks and day trading, the true penny stock, the supernovas. And we talk about it every day in the Steady Trade team. So, all right, everyone, have a great day. Let me know below. Did you ever consider swing trading a $4 or $5 stock? I mean, I think, you talk to, again, your uncle or your dad, and they'd be like, "Oh, avoid those junky penny stocks." Well, tell them, hey, maybe if you saw the GME, or maybe you saw a plug or a WKHS. I'm just thinking some of the stocks we went over recently. The potential's there. It's low risk, and you can really grow your account. Have a great day, everyone, and we'll see you on the next video.